Good afternoon, everyone. Gabe Velazquez here, Transparent Trading Solutions. Hopefully, everybody had a great trading week. It's been a little challenging on the indexes. Yeah. All right. Go ahead and type in the chat for me if you can hear me. There's a little bit of a delay, and you can see me okay. All right, everybody. Let's get right into it. Yeah. Hi, Dennis. All right. So, unless you've been living under a rock, you guys know about the employment numbers today. So actually want to cover that very quickly here because there's a couple of important factors, and I've kind of been talking about this. I've been writing about this for the last couple of weeks, where good news on the economy is actually bad news for stocks up until maybe even today, because the stocks are actually rallying into the close a little bit. So maybe that exactly, Dennis. Yep, you got it. So, but on that, and we saw that more or less in the bond market. The bond market is really where you saw the impact, where the bond market got hit really, the 10 year and the 30 year. So where are we at technically? So let's cover that. Where are we at technically is we haven't really, the numbers that I gave you on Tuesday haven't really changed a whole lot. Essentially, the market has been in a fairly tight range over the last week. We started off the week range trading between, that 40.85, 41.70 range. And essentially, we're sitting right on top of that today. We did get up to that 41.75 earlier and then started range trading again. And so nothing really changing. We still are essentially swinging back and forth in that weekly distribution level, okay, which is goes from roughly 4,100 to 4,200. So nothing really to reassess there. And next week, now that we have a hot jobs number, the inflation number is going to be even more important. That's coming in on Wednesday. So next week's inflation number is going to be very, very impactful as we go into the end of the summer. And I think Jackson Hole's coming up by the end of the month too, in regards to what the Fed is going to say and do. Okay. So all told, again, lots of range trading in the indexes. We haven't really made a whole lot of headway this week. So this week was largely, unless you were trading the ranges, you really didn't have a whole lot of big moves in there. Okay, that's on the S&P. The Nasdaq, similarly, the Nasdaq still is the stronger of the indexes. We did sell off a little bit today with the rates going up on the 10-year. And so that did put a little bit of pressure on the, that did put a little pressure on technology. But all in all, similarly to what we've been discussing, still just kind of range trading. We have a level. In fact, if you look at your charts again, look at your 4-hour charts around the, let's call it 13,400, 13,460, 70 area. You'll see a very nice distribution level. In fact, we came up a few ticks from that last night, and then the market sold off after the non-farm payrolls. And again, we're just kind of back and forth, swinging back and forth. So that's going to be really an interesting level coming in over the weekend and possibly tomorrow. Possibly Monday. That 13, you can see it pretty plainly on the charts. There is a, that's a drop-based drop, but there's a level right above that. If that fails, that is actually the big resistance level in the NASDAQ that comes in roughly around 13,550. Those are pretty obvious levels, one question I get all the time is, if it's too obvious, does it mean it won't work? Well, if you think about all the levels that you've been plotting, most of them, have worked. In fact, that level I just gave you, that seems pretty obvious, right? That 13,390, 375 to 13,469, that seems like a pretty obvious level. And that, if you were front running that level, you did okay with that. And then I did mention some other levels on Tuesday. So, yeah. So obviously the NASDAQ, if the bonds, we're going to get into the bonds in a second. If particularly the 10-year does see some further selling, that may put a damper on the NASDAQ. That could actually, hold the NASDAQ back a little bit. So, now one of the things that did happen, I think it was Wednesday, we did have a big bond sell-off out of the blue. I don't know if you guys were watching that, where the 10-year and the 30-year really, and TLT really dropped off pretty precipitously, and then kind of recovered a little bit. So maybe that was the tell. I don't know, right? Maybe that was the tell. All in all, we are sitting at a if you look at a daily chart, by the way, everybody pull up a daily chart of the 10-year. We are making higher highs and higher lows at the moment, right? So you could still make the case that this pullback we saw from 122, the distribution area that we've been talking about, 122.14, if you look at your daily chart, that was a pretty clean distribution area. You can still make the case that distribution area, the pullback down to the 119, is in fact still a pullback and an ongoing move higher, correct? So it's going to be really interesting to see if we can hold on to this 119 level and start, making a lower, that pivot right there. You guys can see that also. That was from this week's sell-off and then a recovery. We just closed above that, but that comes in, that low comes in roughly around this 119.10. And so that's going to be on a technical level. It's going to be interesting to see how that holds up. And if we break down through that 119 area, 119, 118.28, that could send rates right back up above 3 on the 10-year, which by extension could affect the stock market by extension, right? Because you can't have a big rally, or you can't have a continuation of the rally if rates start creeping back up again, especially the 10-year over 3. Okay. All right. So those are key areas on the 10-year to look at. Also, the correlation with the dollar. So the dollar is obviously interest rate sensitive. I've been talking about this here, writing about this on the weekend newsletter. So the dollar did rally because rates came up, but all told, the dollar seems to be in, at where it closed today at 106.5 is essentially a kind of in no man's land, if you will, because you got that high up around the 106, 107, I'm sorry, 107.50 versus, you got 107.50. You can see where we have a big distribution area there. You can see we had a couple of wicks up there that failed. And then I did mention on Tuesday, the 105.15 to 104.50 accumulation, which is again pretty discernible there on a daily chart. We did come off that. And so where this puts the dollar right now is right smack in the middle between 105.15 and 107.50. So I would deem that kind of in no man's land, right? So it's kind of in no man's land there, which in turn, again, affects a lot of the currencies. Now, the one currency I've been focused on lately has been the Japanese yen, right? Because if you go through all, there really is no point in going through a bunch of these other currencies, especially the euro. You can see it's just been in a very kind of defined tight range. You can go across, all the Kiwi and the British pound. British pound did get some volatility, but it's a real mess if you look at those charts on the British pound and the other one. So the only one really, the two currencies that I've been focused on primarily have been the Japanese yen and the Mexican peso because they were having some movement. Now, to that end, we did get long here at TCS. We did buy Japanese yen this morning as the dollar was cratering. So we did pick up Japanese yen at 74.17. If you want to look at that, obviously we're up a little bit on that. I mean, not a big deal. But yeah, so we're coming into the we're coming into the weekend long yen 74.17, and also looking at in relation to the dollar. I've been also talking about gold and silver, and gold. In fact, I talked about gold having some resistance, some areas where it could have some challenges moving higher around the 1805. So again, if you were looking at that, 1805 is where we did pull back. We got a little bit of a pullback and not a whole lot because of the dollar strength. And so it's going to be really interesting to see. I'm definitely looking to buy gold on a deeper pullback down around the 1735 area. If you check out your charts, you can see that also as well. So, and then silver's got a really nice, interesting area around the 19, right around the 1910 level on silver. Silver and gold have had a, hey, how you doing, JT? Nice to see you. Welcome on board, my friend. Okay. Yeah, we're getting a lot of. It's interesting, JT. Just on an off note. Yep. On my website, I've got a lot of people coming and going. It's interesting how things are evolving there. Yep. So, in any event, beside the point. So, where were we? How you been, my friend? Okay, so lost my train of thought here a little bit. Yeah, still focused on the dollar. Still focused on the dollar, and it's been a little bit of a challenge. It's been back and forth, and until we break inflation and until rates pretty much been, again, the correlation. If you don't understand. Oh, nice. Good. Yeah, it's been I don't know what type of JT. I don't know what type of style of trading you're using, but like this week was if you're trading indexes, pretty much range all week, right? And so one of the things I've been talking about, and I know you come in here and you listen to it even if you can't come in live. Again, staying on the currency theme, the only two currencies I've been focused on really are just Japanese yen and peso. And in fact, we bought some Japanese yen this morning. I just mentioned before you came in. Okay. And then also the metals related to the dollar movement, right? And I am looking for some pullbacks in gold and silver as well. So moving from there, also one last thing before we leave the dollar alone. If if you're wondering what the correlation is now with the dollar, it is interest rate driven and it is stock market driven, I should say. So essentially, I would say that if this market has some legs, the stock market, the S&P, still, a lot of got some work to do, right? 4,200, that's the highs. Technicians, algorithms, and whatever we still haven't been able to break above that high. And why is that 4,200 high? Because that would, if we close a weekly close above that, would put us making a higher high for the week. And that would probably kick in some short covering and so on and so forth. Right? Does that make sense? So that's really a key area to. My point, Dennis, is that if this stock market, and it did, you got to be impressed today with the resiliency of the S&P, right? And the NASDAQ for that matter. I mean, it initially got hit and then came all the way back. So that could, remember, I always talk to you guys about the message of the markets. When stocks fail to sell off in the midst of something that you would typically think, so a bad earnings report and the market, and the stocks don't sell off and so forth. It's going to be worth looking at. Yep. So the message of the market, and especially today, what I was talking to my members this morning about. First thing, we were in our M3 session, which is the market methodologies session early this morning, right before the non-farm payrolls came out. What I mentioned to everybody, once we got that initial jolt, with the big hot number coming in, dollar selling up, bonds getting hit, and stocks getting hit, I mentioned to everybody, the close is going to be the most critical. Remember, amateurs open the market and professionals close the market, right? You guys, I know you've heard that one before. And the fact that we did bounce hard into the close, if we had been, again, if we'd come in right now and we've been talking about the S&P down 30, 40, 50 points or something, that would be different. But the fact that we actually hung in there may be telling for next week, right? And obviously, everybody's expecting a CPI that's going to be pretty hot next week, Wednesday. And that, again, just to repeat myself here, because of what happened today with the non-farm payrolls, is going to loom very large and going to have huge impact on the rest of the markets next week. So that's not till Wednesday. Okay. All right. So again, related to the inflation thesis, the inflation narrative, oil broke 90. Remember, we've been talking about oil being in a range roughly between 90 and 102. We finally gave way on oil at 90. But here's the thing, though, it is getting pretty extended to the downside. It would not surprise me if we traded down to, I don't know, about 85 on oil and then bounced hard. The fundamentals on oil, let's see, the likelihood of a blow off top or double top. Double top, I'm not sure what you mean, JT, because a double top usually is at the highs. We're nowhere near the highs. Are you just talking about, right now we have resistance at 4,200 on the S&P, right? I'm not exactly certain what you mean by a blow off top. JT, I really don't see those. You mean a return to the all-time high? Well, that probably, that's a stretch, right? to get back up to the old highs. Yeah, there's a bunch of levels still got to get through to get up to the all-time highs. I do it at some point, the market over the long haul, the market always goes up, right? sometimes it takes a long time. Like for instance, from 1968, it didn't get to the all-time high until 1982. Check out the chart on the Dow. So could we be in that situation? Of course, but eventually, maybe all of us will be gone by the time that happens again. I don't know. That's, better in the 70s and 80s, it took almost 12, 13 years to get back to the old highs. So, but in any event, yeah, JT, I would, obviously, if you're a long-term investor, I would still be adding. We've had a nice bounce off the lows, and I still think we have a little bit of upside left. And the debate still kind of rages on whether this is, again, a bear market rally or, we put in the lows for the year and so forth. I think that's still kind of up for debate. But on a technical basis, just kind of watch the market and listen to what it's telling you. And again, I was today's action suggests to me, at least in the near term, that this rally still may have some legs. Okay. So watch out for that 4,200 on the S&P. In fact, we had a short. We had a short. Check out this chart, JT, and all the rest of you guys in here, guys and gals. Check out on the NASDAQ futures, the 30. You can actually see this on an 8-hour. 13,390, 375, 13,469. Check it out. We came up a little bit shy of that last night, right? So you can clearly, and then there's the next level would be 13,600 on the S. One last thing on that, in regards to the S&P. One thing I would also start looking for, everybody, is the VIX, right? I did talk about this. We got some seasonal. VIX is did get a little bit of a spike today, and then it came right back down again. But watch it around the 18 to 20 level. If we have a kind of maybe a strong rally in the S&P up to beyond 4,200, there's another level up top that I'd be looking at the short, and that is coincidental or in conjunction with the VIX dropping into the mid-teens, right? 6, 17, 18, something like that. That would be a very good signal to start, maybe, begin to start looking at shorting opportunities and so forth, especially in some stocks. Does that make sense? I did mention AMD last week. Apple, notice it is struggling. Apple's struggling around 66. AMD, I mentioned a pop up to about 106. Just kind of mentioned some stocks that I did on Tuesday. That also pulled back around the 105 area. I'm still looking at those as well. Okay. Does that make sense, everybody? So it's going to be we've got summer doldrums almost. A lot of what's going on is a lot of algorithms running the show right now. You can clearly see that. Yep, you can clearly see that when like this morning, when the bonds, especially in the bonds, I think I don't know if you guys are watching on Wednesday when they tanked the bonds, the 10-year, 30-year, and remember that? That was all algorithms. Yep. So you get these algorithms, they get, they feed on themselves and they get that momentum. And especially when it's summer and there's not a ton of liquidity, that's usually what happens. So, okay. All right. Let's see. One last thing. Grains. Love the grains. As you guys know, I've been talking about if you guys do not trade the grain markets, again, the same levels. The grains have been actually pretty nice. What I see a lot of people is they get too kind of micro focused on just equities, equity indexes, S&P, NASDAQ. And like this week is a great example where there wasn't really wasn't a whole lot to do. But on the same token, check out the grain markets. Look at what soybeans did. Look at what corn did. So there are other markets, if you kind of branch out a little bit, where there's a bunch of opportunities. So there's these gaps in soybeans. We're looking at 13.50, corn 5.85. In fact, I've been talking about that $14 level in soybeans. We actually did have some trades that we had working in the corn, but that never came in. But and then soybeans is actually starting to really have some nice moves and creating some really nice levels. So I'll be looking at that probably on Sunday, because we've had these nice gaps on a Sunday. If you guys don't watch the grain markets on a Sunday afternoon, 8 p.m. Eastern is when they open, and there have been some really great opportunities on gaps on a Sunday in the grain markets. And the one thing I would first and foremost tell you is obviously know what your risk is and understand before you get into any market, really, right? Okay, everybody. Do you guys have any last questions? I got about 5 minutes left. Is there any specific market you want me to look at? And unfortunately, not everybody can join me live. I'm getting over 100 views on this thing, so everybody will probably come in later and review this. You guys, anybody here? Okay, if you guys don't have any other questions, again, subscribe to the channel, give me some likes, put some comments in there so I can keep this thing going. Visit the website. Love to have you guys, even for if you want to come in for a couple of days or whatever, just check it out. Oh, good, Dennis. I appreciate that, my friend. Yep. For the rest of you, and again, for some of you guys that come in later when you're not live. Also, are you guys all subscribed to the newsletter? And yeah, and I just did a class, by the way, a basic options class, which went really well. Oh, good, Steve. Yeah. Okay, good. Yeah, I'm going to be running some more classes as well. Yeah, I know, Dennis. Well, it was for the basic. That's what I put. It wasn't. But I'm going to be running on my website. I'm going to be running some more. Kind of. Yep. I get it, Dennis. But remember, it was options for beginners. It wasn't options for old grizzled veterans like you. Right. Okay, okay, everybody. Okay, everybody, have a great weekend. Right? Have a great weekend. I'll see you guys on Tuesday. I'll be doing this again on Tuesday, and I'll talk to you then. Okay, have a great weekend, everybody. Again, subscribe and give me some thumbs up and all that good stuff on YouTube. I'm new at YouTube, so just kind of get my bearings. Okay. All right. Take care, everybody.